Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hello everyone, my name is Ravi. Welcome to another edition of our weekly podcast, The Week That Was. The rally in global assets stalled last week as optimism over a dovish policy shift faded amid a slew of hawkish comments by global central bank leaders. The S&P 500 and Nasdaq composite indices notched weekly declines of 0.7% and 1.6% respectively, while the shorter-term US bond yields and US dollar edged higher as yet another shift in terminal policy rate expectations dampened sentiments. Back home, Indian equities edged lower this week after registering gains for 4 consecutive weeks. The Nifty index started the week on a mixed note and traded sideways after reaching closer to the all-time peak. The Nifty index fell 0.2% over the past week and underperformed major Asian peers. With this week's fall, the Nifty index year-to-date 2022 price return stood at 5.5%, while the gap from its October 2021 peak stood at 1%. Broader markets underperformed Nifty, with the mid-cap index down 1.5%, while the Nifty small-cap index was down 0.9% for the week. Among sectors, telecom and banks were the best performing sectors with gains of over 0.4%, while the utilities and auto were the worst performing sectors with cuts of over 2% during the week. The Indian fixed income markets came under pressure last week after posing strong gains in the prior week. Bond yields edged higher across the curve later in the week, following a resurgence in global bond yields amid hawkish comments from members of the US Fed and European Central Bank. For the week, the 10-year Indian government bond yield remained unchanged at 7.31%, while the 3-year and 5-year Indian government bond yields rose by 9 basis points and 3 basis points respectively. The INR gave up a large part of its recovery made during the previous week. For this week, the INR depreciated by 1.2% to close at 81.7 per dollar, as the rally in US bond yields, strengthening US dollar, negated the positive impact of sharp correction in crude oil prices and stable foreign investor inflows into equities. During the week, we also had a few domestic macro data reported. The first one was on India's consumer price inflation, which fell to 6.77% year-on-year in October 2022 from a 5-month high of 7.41% reported in September. This moderation was driven by a softening in food prices along with fuel and light. However, on a monthly basis, consumer prices rose 0.8%, the highest since May 2022. The second data was on India's wholesale price inflation, which fell to 8.4% year-on-year in October 2022, compared to 10.7% reported in the previous month. This was driven by a slowdown in prices of both manufactured products and fuel and power. Further, prices of primary articles also moderated, with the cost of food easing sharply. On a monthly basis, wholesale prices increased by 0.3%, sharply higher than a decline of 0.7% recorded in September. The third data was on India's industrial production, which rose 3.1% in September ahead of market expectations and compared to a contraction of 0.8% reported in the previous month. Manufacturing output rebounded after contracting last month, supported by an increase in the production of basic metals, coke and refined petroleum products, among others. Output also rose for both mining and electricity during this month. At this point, I'll take a pause and thank you as always for listening. If you find this podcast useful, please like and subscribe. Have a great week ahead.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, reach out to your Standard Chartered Relationship Manager or visit www.se.com/in.